Gold miner Pan-African Resources is in the process of acquiring Harmony's Evander mine. Analysts have expressed concern that paying for the deal would erode Pan-African's generous dividend base. Gold production in the company's Barberton mines has expanded significantly in recent years. And of course, we're referring now to the JV with Wits Gold. They're looking at Harmony's Evander mine. They're buying that asset. They think that they can make gold, if for lack of a better word, out of this mine. Do you think that they are going to be detrimental to current shareholders in terms of negatively impacting dividend flow?
Well, I think at a cash cost of around 250,000 Rand a kilogram, which is currently what a quarter, 250,000 Rand a kilogram, that is Evander's is producing gold at, with a gold price of about 400,000. It's generating about 120 million Rands of free cash flow after tax a quarter. I think that on a 1.7 billion Rand acquisition price on a 3.5-year payback period, I think they'll be able to generate a lot of shareholder value out of this acquisition.
Has anybody asked the question, why would Harmony give up an acquisition or give up an asset that is so good?
Look, I wondered that myself. I think it has to do with Harmony's own perception of its asset base. It wanted to do something which it potentially could kind of show some sort of progress. My understanding of the transaction is that they are issuing, it's a scrip-based transaction. So in other words, Harmony will inherit a stake in Pan-African rather than getting cash for this at this particular point. I see you shaking your head.
Anthony's shaking his head. Don't do that. You must shake your head and stand your case. He doesn't know what he's talking about. Take us through the detail, Anthony.
I think it will be debt financed at the Harmony level, at the Evander level, and cash will then be paid up to Harmony.
So as it stands, the idea is you do the deal, then the new owners go out into the debt markets and raise funding, and then Harmony will actually get the cash flow. Because Harmony, of course, is focusing on those Papua New Guinea things.
Well, that's the strategy, isn't it? That
Absolutely.
Harmony is actually reducing its South African exposure. But then, of course, it begs the other question, Anthony, which I'm going to throw to you directly, but if gold mining in South Africa is something of a headache. We know deep level mining, we know that we've got wage issues, we know that we've got electricity issues. Shall I continue with the list?
Sure. The consensus view is that, deep level hard rock mining in South Africa is just a shareholder destroyer, shareholder value destroyer. But the contrarian view is, and evidence will suggest that Pan-African is an exception to the rule, that they have been able to generate a huge amount of free cash flow out of their Barberton operations. And if you can cherry pick the right assets, if you can buy relatively low risk cash generating assets, make them sweat, there is lots of money at this current Rand gold price to be had.
Okay, but understand that Barberton, I've been to those Barberton mines because they used to be Anglo-Vol gold mines. It's New Consort, it's Sheba, it's basically little holes down in the ground around Barberton. It's that greenstone gold deposit. So it's not reef type, multi-level, super hot type style mining. The trouble there is that your reef is not predictable because there isn't a reef, it's like gold veins. So you can get lucky, you can do a whole lot of development and find it.
When did you start doing this on-ground analysis for the gold mine?
No, this is from a previous life of mine. I worked for a couple of years for Anglo-Vol back in the late 1990s. We used to go down there to give the old miners tires for working there for 25 years.
And you sure the situation hasn't changed since the late 1990s?
It's the same. Look, they did surprise themselves by finding more gold, particularly in the consort section. It's the most wonderful environment. You can't believe how beautiful the grass and the trees are down there. In the mine itself, it's like all these little rabbit warrens. The point I'm trying to make here is that the production of 45,000 ounces a year or whatever it is kind of a surprise, and it's not something that you can say for sure you're going to find year after year after year on a sustainable basis.
Closer to 50,000?
No, it's 100,000.
100,000. Way off base.
The counter argument to that is they've been producing gold there for over 100 years. The consensus is that the life of mine is about 15 years, but it constantly is 15 years. There is lots and lots of gold, and with this new BIOX technology, it really de-risks, it's slightly higher cost, but it de-risks the greenstone belt mining operation. There is, concentrated risk in terms of there's one area, one mine risk. This acquisition of Evander kind of diversifies or reduces that risk. So we're really constructive. We think that the investment case for Pan-African Resources is very sound.
Beyond this asset, where do you think Pan African Resources is going to go next?
Well, it's got 2 tailings projects. It's got this Phoenix Platinum project, which is going to produce about 1,000 ounces of PGMs a month for 17 years at a cash cost of about $664 an ounce.
Are they still exploring, or are they developing?
We'll ramp up to full production May this year, and that should generate a huge amount of cash. They've got the Bramba Tailings project, which is also in the Barberton area, which would produce about 20,000 ounces a year for 3 years at a cash cost of about $450 an ounce. I think that really, this company is well run. The management, impresses us every time we talk to them. They have delivered on everything they said they would.
But I also asked the question, you were on the desk the other day where I said, asked, do you have the Stockholm Syndrome? You sure you haven't fallen in love with management? Is it always lose gets done?
There's one little piece to the equation that I want to ask about. What about this gold deposit they've got up in the Manica province, which is in Mozambique, which they reckon they could float on international markets?
Yeah, there should be an announcement sometime in April about a listing of this Manica resource on the Australian Stock Exchange. They should sell down some of their holding in it. That should generate a lot of cash that they can then apply into Evander, and should also force the market to value this Manica stake. So there's a value unlock event coming in April.
And one final question, the partner in the Evander project, Wits Consolidated Gold, is that a real company?
Yeah, it's backed by Adam Fleming, one of the big London City financiers. It's got a good story. It's got a good management team. It's still somewhere off, it's still kind of in the early development stages. But this Evander project should then give them a cash-producing asset, which also is quite a good story.
Go back to what you said about value unlock come April. Did you say in April? So we should be buying in anticipation. Is the market already priced in the potential value unlock there?
I don't think so. We think that this thing will do about R2.50 in earnings to June this year. We think it's worth at least 10 times multiple. So R2.50 target price to June on a forward dividend yield of about 5.5% with a potential value unlock. I think the investment case is very strong.
Do you stand convinced on the investment case, hot or not, in your book?
Well, this is one of the stocks that's performed the best in the gold sector, but it's small and it's relatively low turnover in terms of its shares. It's kind of a 3 billion market cap company, if I'm not mistaken, but it's done very well. You could have bought them for sort of 60, 70 cents not that long ago, and here they are trading R1.92, and he reckons they can go to R2.50. I don't know though. I've heard this story so many times in my career in the investment markets. Mining companies that have relatively low earnings now, but are full of promise, and this project and that project.
Hot or not?
Not hot, not for me.
Not hot. And Anthony, hot or not?
Red hot.
Red hot. I like it. On that note, we're taking a short break.